Hello again. I'm here with Brendan McCurdy, who's the global head of investment strategy at ARES Wealth. Good morning, Brendan. Please
Morning.
introduce
Bonjour.
yourself and your firm.
Yeah, really good to be here. My name is Brendan McCurdy. I'm from ARES, and in particular, the wealth side of ARES. ARES is one of the very largest private market investors in the world. That's all we do: private equity, private credit, private real estate, and private infrastructure. And on the investment strategy side of things, we sit in on the investment committees, we watch the deal flow, the pricing that's happening, and we match that up with investors, what's happening in the markets and in the macro, and think about from an asset class and asset allocation perspective, how those private markets come together and how they fit with the public markets portion of the portfolio.
What asset class or strategy are you most excited about at the moment?
I mean, as I look at the private market asset classes, it's going to be infrastructure. As a professional investor, I think one of the things you want to be looking for is where's there a real supply and demand mismatch, and where we see one of the largest mismatches in supply and demand is in infrastructure. So much of that is being driven by the increase in usage in electricity right now, and of course, it's very difficult to get new projects built. And then just in terms of some of the change in the flow of where energy comes from, where it used to come from, and where we want it to be coming from in the future, all that creates an incredible demand for capital. And so as an infrastructure investor, you've, in a lot of ways, never been in a sweeter spot.
Public equities seem quite fully valued at the moment. Where do you see value creation potential for value investors?
Well, if you are a value investor, if you fancy yourself like a Warren Buffett acolyte, I think you have to be looking at real estate right now. I mean, real estate has been beat up over the last few years. Cap rates have risen, yields are much higher there now, and it's really just the bad news or the malaise that has people not looking at real estate. But the real estate recovery is already underway in our opinion. And so I think investors are missing it if they aren't taking a serious look at it now. So that's really where we would be looking to pick up the biggest value within the private markets.
ARES is very well known for private credit, and we all know what happened a couple of months ago with various investments in that space. What should investors look for in this asset class at the moment?
Yeah, so there were headlines seemingly around private credit, but when you actually dig into the headlines, most of them were for publicly traded companies. They're more for leveraged loans, things that were out in the liquid portion of the market. As we look across our direct lending, our private loans to businesses book, we actually see real strength. So as we look, like, our underlying earnings growth of the companies that we own continues to be strong. As we look at the amount of leverage continues to be low. Non-accruals, meaning people not paying, continues to be very low and below long-term averages. So we just don't see what's coming through the headlines in the actual book of business that we have. And I think, as a professional investor, there's not much better than clipping a comfortable 9 to 10% coupon on loans to businesses that you've been lending to for the last 15 or 20 years. So we see real strength in that space.
What do you think are the biggest myths around private markets for wealth investors?
Well, I like specifically that you use the term private markets, because I think too often we hear people calling them alternatives, and I think that's the myth, actually, that they are alternative, like some trading strategy or cryptocurrency, which is not the case in our opinion. So we view equity as equity and debt is debt, and whether it happens to be traded on an exchange or not, we don't believe is a determiner of whether an asset class is core or alternative. And so the private markets, and in particular private equity, private credit, those are your standard equity and debt. We believe they are a core part of the portfolio. And so I think that myth is thinking about them as anything other than the core.
And if you're a wealth investor, how should you incorporate private markets into your portfolio? What's the best strategy and the best mix?
Yeah, so that's a big part of what my team thinks about is that mix. And in fact, we have model portfolios from an asset class level that our clients can look at. We think about as much as 50% of the portfolio being in private markets, and in fact, we have quite a bit of literature and background and analytics going into that. So anyone that wants can visit accessares.com and search by category and actually see the sort of allocations. I think one of the most important sort of mindsets to have, though, is thinking about private markets as an allocation. I think too often in the past, investors thought about things from a deal by deal standpoint. And they like this deal, then they did some of this deal that they liked, when really we think it's much more prudent to think about the private markets just like your public markets. What is the overall asset allocation? Thinking about how the different asset classes mix together. What's the long-term target that you want to be at, and working to stay there, rebalance as part of a total financial plan for an end investor.
So, Brendan, I was surprised that you said only 15%, because if I had a pile of money to invest, I would probably want to put much more money into private assets.
So thank you for the clarification. 50% in private markets is generally what we're looking at. And that may range slightly, but yes, we find that most investors only need a smaller portion of their portfolio to be T+1 or T+3 liquid and show up the next day as cash. So no, actually we're looking at about half the portfolio generally to be in private markets.
Thank you, Brendan. That was very interesting.
Thank you for having me.